Hey, it's Friday, February 11th. This is Mark Hines with your 4-minute week in review. Going to give you 4 points on what's going on in the markets right now. The first thing is it was another volatile week on Wall Street. The S&P 500 was down around 1.8% versus the close last Friday. It's now down around 5.4% year to date. And then the NASDAQ, tech-heavy NASDAQ, was down around 2.1%. It's down around 9.3% year to date. And then the 10-year Treasury, the yield on the 10-year Treasury actually went over 2%. Which doesn't sound like a lot, but it is compared to the start of this year. Started out yielding around 1.5%. So that's a big move for the year, and then a big move up this week. A little bit of a flight to quality on Friday that drove that 10-year Treasury yield back a little bit lower. Excuse me, and we'll talk about that in a minute. But first, what the heck's going on? Why all this volatility? Why the market's down? So the big story is inflation, right? We got consumer price index number, year over year number for January. And it came in hot, which inflation was 7.5% was the number, which is just huge. That's the highest inflation number in decades. Basically what that means, to put that in perspective, if you had $1 million in the bank last year, you can buy $75,000 less stuff this year because inflation ate away your buying power. And it's really kind of putting the Fed between a rock and a hard place, right? So the Fed has been raising rates this year, or they're expected to be raising rates aggressively this year. And the reason they do that is because they're trying to fight inflation, right? Inflation creates all kinds of problems for people. But the flip side of that, and the problem is, as they raise rates, it slows the economy. And as the economy is slowing down and the markets are down this year, the Fed is kind of stuck between, how bad do we want to hurt the economy in the short term versus how bad do we want to fight inflation? So kind of a challenging position from an inflation standpoint. The other big news this week is sort of the Russia-Ukraine issue that's been going on. We got reports on Friday that the U.S. had suggested to citizens that they get out of the Ukraine. There could be some military action there. A couple other countries have been suggesting the same thing. So that kind of spooked the markets a little bit on Friday. It caused a little bit of a flight to quality, basically people buying safe assets. So that treasury yield we talked about, that was over the 10-year treasury yield that was over 2%, pulled back a little bit on Friday in sort of a flight to quality trade. So a lot going on in the market, right? Still volatile, battling inflation. We got the Russia-Ukraine thing going on. The question is, what should you be doing in your account? That's kind of the third point on this list. And, the first thing is, as always, don't panic, right? And when the market gets volatile, like it has been, this is when people make bad mistakes. They panic, they ditch their strategy, they try to get clever, try to get smart. They end up costing themselves a lot of money in the long term. So don't panic, stick to your long-term strategy. Second thing is, there's still a lot of good stocks out there. For example, Enphase. Enphase makes microinverters that are used in solar powered home solutions. Enphase is a stock we own that was up big this week. They announced earnings. They beat earnings expectations. They beat revenue expectations. They raised forward guidance. Enphase is a really attractive stock. Another one that announced earnings this week, Simon Property Group, SPG. Sort of a big REIT. They own a lot of retail properties, and we know the sort of narrative with REITs over the last few years, right? First, it was the internet and the emergence of online shopping that's going to hurt these brick and mortar retailers, and then it was COVID that's going to hurt these brick and mortar retailers. Well, Simon Property Group, excuse me, is kind of the one REIT that's really risen to the top versus a lot of the others. Very strong, healthy financial position, as they lowered guidance this last week, the price sold off a little bit. It's attractive stock. The yield is now approaching 5% on SPG. So that's an interesting one you may want to look at, but there are still a lot of good stocks out there. And then the other point about what should you be doing right now, you should stay prudently diversified, right? People sometimes don't like the idea of, diversification, that's so boring, but it really does work out. I had a discussion a year ago with somebody investing, talking about technology stocks. And, she was saying, I don't know why you don't just buy all technology stocks. Why do you buy any of these old school, energy stocks or energy business? That makes no sense. Fossil fuels are dying, yada, yada, yada. Well, lo and behold, this year, energy sector is the top performing sector, right? And that's been helped by sort of the Russia-Ukraine thing that's going on right now. So the third point is just stay prudently diversified, right? Still good businesses out there, and stick to your long-term strategy. Don't panic. As far as the week ahead, the fourth point I've got on here, what can you expect in the week ahead? more volatility. That's pretty likely. We're also going to see a lot more earnings announcements coming up in the week ahead. A few of the earnings announcements I'm watching closely. On Wednesday, we're going to see NVIDIA announce earnings. That's sort of innovative leader, really the best chip maker out there. They do everything from chips for gaming to autonomous vehicles and to data centers and the Internet of Things, really everything. NVIDIA shares have sold off a lot, sort of as part of this whole tech wreck we've seen recently as interest rates are rising, and that impacts growth stocks more negatively. So NVIDIA will be an interesting one to watch. That is a really strong business that's down a lot. We're also going to see Trade Desk, the Trade Desk. This one does digital advertising, also a very strong leader in the industry. Shares are down a lot on that one as well. So we'll be interesting to see what happens with the Trade Desk. And then on Thursday, we're going to see a REIT, Digital Realty. They do sort of data center REITs. The narrative on that one, right, is there's so much more data with the explosion of the Internet of Things, right? So there's going to be this huge demand for data centers. On the other side, as technology improves, right, there's less and less need for data centers. They don't need as much space. But Digital Realty has really kind of lifted itself up. It's a leader in the space, offers around a 3.3% yield. So I'm going to be interested to see what happens with earnings announcement for Digital Realty coming up on Thursday of this upcoming week. And then the last thing, the sort of takeaway that I want to leave you with this week, just remember that long-term investing is an advantage, right? If you can buy and hold on for the long term, you don't have to worry about these short-term market gyrations. Again, this is when people make terrible, costly mistakes. They panic, they get nervous, or they think they're clever and smart, and they try and get way overweight something, and it ends up being very costly. So just remember, long-term investing is an advantage, and it's really a luxury. If you have that luxury to be a long-term investor, you are in a really good place. I say it all the time, I'll say it again, disciplined, goal-focused, long-term investing, proven to be a winning strategy over and over again throughout history. It's going to be a winning strategy again this time too. So that is it for this week. Thank you very much, and I will see you next week.